Good morning, traders. It's Monday, January the 20th. Taking a look at the charts. SP 500 trading relatively flat on the session, slightly lower along with the NASDAQ, small caps, and the Dow. Overall, we got this blue line running up here. You can see how the market's in this strong uptrend, holding above the 5-day moving average. It pops, consolidates for a few days, pops, consolidates. We've seen that happen many times. And if we look down at these cycles, all in this upper zone here, more or less when this pink line is up here, that is when we're in the power zone. More or less the market can keep going, and until it starts to break down and roll over, that's when we start a downtrend. And we've seen that happen before. It was on the verge of breaking down right here. This is where we started to get into a short position. It was on the verge of starting a new downtrend, but the market, we had good economic news, and it popped and held its ground, got back into an uptrend, and it's been running ever since. We're up about, I think it's up about 8% on our SSO position as the S&P has been moving higher. Now, overall, what we're looking for going forward is continued upside on the equities market, but we are starting to be a little more defensive with some other plays like long and precious metal miners and bonds as well. But let's just take a look at this price action of the SP 500 and zoom out. I noticed this morning I was looking through some charts. We're actually in a really interesting market condition where if you look at this really strong rally that's been going straight up, it's very similar to this type of rally where it picks up speed and it's climbing at a rate that is just eventually we're going to see some type of sharp pullback. The stronger something goes up, usually the stronger the pullback. And I feel like we're very close to something very significant. And what I noticed this morning, I'm going to try and put an article that shows it in more details, but long story short, during this phase right here, it happened again over here, and it is happening right now, is we're seeing gold miners actually perform really well to the upside in general, and we saw them rally up here as well, and again here, and more or less, it's a sign that I think we're going to start to see the equities market have one of these really sharp pullbacks. I think we could see a very sharp correction in the market. And what to add one more layer to this, the put-call ratio is what actually spurred me on to this. Now, if I was to pull it up, I won't pull it up. I got to do some custom charts to show what I want. But more or less, we're seeing a level in all of these rallies that we've seen where the put-call ratio, the 3-day average of the put-call ratio, more or less, has been trading in a very low range. This price action is almost identical to this price action. Gold miners are outperforming. Everyone is super bullish on the stock market, and usually we see gold miners start to perform just before the stock market rolls over, and that's what we've seen. We're seeing that now, and we're on this verge of, I think, a very sharp pullback in the equities, and we should see bonds and metals pick up slack and start to really take off. And that's why we've been scaling out of our long SP 500 position as we get higher and hit certain thresholds and targets. We're lightening our load because if we get back to some of these, you look at some of these pullbacks here, let's just zoom back. You can see really within 2 days, months of massive rallies, it gets wiped out. Another one over here, really everything happened in 1 or 2 days. You know, months of gains gone, and that's how the market works. Typically, the market will fall 7 times faster than it rises. So you could hold something for 7 months, and then in 1 month, 20 trading days, all those gains just completely wiped out. And in some cases, that can happen within a few days, depending on what type of crash we get. So we got some pretty interesting price action slowly building. We are still along the trend. We're not fighting it. We're playing this trend, but we're slowly scaling out and slowly getting into the defensive. So let's take a look over at bonds. Here's the bond charts. They've been rallying up and consolidating for several months here. They're building this beautiful bull flag, and hopefully we're going to start to see these start to really break these 2 previous highs, close above it, and start a rally to some new highs. And that would mean the stock market's starting to roll over. If we take a look over at, let's take a look over at gold. Gold, obviously we had talks of I don't know if you could call it war, but missiles flying, typically that means war. And of course, gold has already led the way. I was expecting gold and bonds to move together, but gold definitely had a little more upside pressure based on the news that came out. So it's kind of led the way. It's holding up in this nice pattern. It could continue to flag down, trade sideways for several months. You never know how long something will play out. But overall, we're making a series of higher lows, higher highs. It's got a bull flag formation, and we're looking for a breakout. Now, if we look at the GDXJ, which we are long, let's just look at this. This is the 10-minute chart of the ETF, and I wrote on these charts and showed this in a video last week. More or less, we've had a run up, we had a consolidation, and the 618 upside target was hit, which is right here. This is the 618. Obviously, we're going to have higher gains up here with the 100% measured move if that can come into play. And then we started forming this broadening formation, which is usually bearish. We saw the market break down right through this support level, through this noise. It's unwound to the downside, and the height of the rally of the noise is usually the downside target. So if you take this box, I copied it, I pasted it to the breakdown zone, and of course the market came right down. It traded in pre-market down below those levels a little bit, but more or less closed there, opened back at this level, and last week we saw it rally up to this resistance area, and now we're flagging out and consolidating in this point here, and with any luck we're going to see the second half of this move to the upside. And if we were to just draw a target on here to get an idea where this next move could go, we'll go roughly from here to here and down to these lows here. We'll carry it forward. We could easily see the GDXJ gold miners come down, consolidate. This would be the first level. It might have a hiccup and pause, and then we could see this 100% measured move. And notice how this previous breakdown level went right through the noise of this pennant formation. It's kind of hidden on the chart, but this 100% measured move goes almost smack dab through the middle of all this noise. That's where the average share was traded price-wise, which means as price gets up to this level, all these people who are long, who held through this drawdown, and they're all fearful. They're all saying when it gets back to break even, get me out. That was a nightmare trade. I hated it. And that creates resistance. And then we could see the market pull back and consolidate, potentially build another bull flag for us to do another Fibonacci measured move and give us another 618 and a 100% measured move, which for all we know could fall in line with, let me just squish this chart down. Oops. Squish the chart down, pull it down. Could fall in line with this longer term 100% moving average or a Fibonacci target up here. So it's going to be interesting to see how things play out. But overall, the miners need to break higher this week out of this range, get to the upside, hopefully hit this 42 level, maybe consolidate for a while, and then see if we're going to get that second half of the move to the upside. Let's go take a look over at natural gas. Big price action in natural gas going on. We are in a small position knowing it's going to be really volatile as it's trying to shake the market out. You can see here the market was down substantially, down to 183 at one point last night. It's starting to recover. This looks like it's a washout low. We had a support level right across this low. It was also a fib measured move for a downside target. We closed below that level on Friday. I think a lot of people wanted to get out of their positions, not hold over the weekend for futures. The market closed lower, and of course I think a lot of people panicked out, and when the market opened last night, we just saw a huge flush of orders get shaken out. It's coming back. For all we know, this could be a very significant reversal in the market. We've seen this happen in natural gas quite often. We had something similar like that over here where the market flushed out and then put in a bounce and it recovered. Hopefully we'll see that today. Depending where this opens with our UNG, the price could open below our stop loss. Keep in mind our stops are based on a closing price, meaning if we don't set a hard stop with our broker, if the price trades below our stop today, you shouldn't be getting out of it. More or less, we hold on to it to the closing bell because a lot of times the market will sell off in the day, recover, and be above our stop by the end of the day. And then from there on in, it just rockets higher. This is a flush out low that flushes the stops. All the futures traders are getting stopped out. That's why we're seeing this huge move to the downside. We might see those levels tested again today because the market's going to want to get everyone out of their ETFs, flush the market out in the regular trading hours for the equities positions, and then we could start to see it recover. So we'll see if this is a big shakeout here, and then we start to build this base. We're looking for eventually a base across here, just like a base here, the base here, and we'll be looking for some type of significant rally that could be much higher. You can see we've got rising highs going forward. We're getting into the key winter time of the year. Seasonality wise, we should start to see this pick a bottom and start to rally. Looking over at crude, up 0.7%. I'm not a huge fan of crude. We're going to let it do its thing. It might form a bearish formation, a longer one over here. Overall, the trend is trading lower, but it is still not the best looking chart at this point. More or less, we are already in a play for the energy sector, which is natural gas, so not looking to get into crude at this point. But eventually we'll find a setup in crude and take advantage of it. I think that is it for this morning, so I'll talk to you in a little bit. Bye-bye.